Welcome back to another episode of Business Class. And in today's episode, we are going to talk about 7 reasons why your business is almost certainly overpaying tax. So most businesses are overpaying tax, they just don't realize it. So if we take the example of £12,000, which is our average when we do independent tax reviews or second opinions over 10 years, then that would be £120,000 of lost cash flow. If you're getting a 10% return because you put that in the stock market or some other kind of investment, that comes out at £243,000. But more likely, you're going to put that money back into your own business. And I would say that a good return by putting capital back into your own business is around 30%. So at 30% return year on year, by overpaying tax by that small amount, you're actually losing £743,000 of cash flow over a 10-year period. It hurts just to think about it, right? What could you do if you reinvested that cash back into your business? So what are the reasons why businesses almost always overpay tax? Let's get into those now. Well, the first one is being scared about taxes. Not understanding the difference between tax avoidance and tax evasion. Tax evasion is the one where you can go to prison, and that's not what we want. But tax avoidance, although it sounds bad, is actually just the practice of maximizing your allowable deductions, the things that in the UK HMRC want you to set off against your income. And the only way you're going to be able to maximize your deductions is really being clear about the difference between tax avoidance and tax evasion, accepting that we want to practice tax avoidance in the purest sense of the word, and we want to maximize our deductions. So the second reason why businesses overpay tax is they never get a second opinion on their taxes. Now, I understand that the relationship between an accountant and a business owner is one of really deep intimacy. You've opened up your financial results, you've opened up your business to someone outside of your business, and it takes a lot as a business owner to build that level of trust with an accountant. However, it doesn't mean you have to leave your accountant or do something shady to get a second opinion. The first step is, could you get a second opinion from someone internal at your own accountancy firm? Could you ask them, are my accounts being signed off by a chartered tax advisor, a CTA qualified accountant? What kind of stages of review are they going through before you send them to me? And the second option is to take up something like Grow Factor's free offer of a second opinion on your taxes. There's no commitment, there's no cost. You just have to you have to send your last set of filed accounts, company tax return and personal tax return, and within 15 to 30 minutes, we give business owners a second opinion on their taxes. Now they can go back, or you could go back to your accountant and say, hey, what about this deduction? Or hey, what about this idea around tax planning that we may have overlooked? So I just cannot understand why you would work really, really, really hard and not be willing to let someone else, whether it's inside your own accountant's firm or outside, give you a second opinion, just to give you that peace of mind that you are paying the minimum tax legally possible. And the third reason, which is kind of closely linked to the second one, is 99% of business owners' accounts are not getting signed off by a tax qualified accountant. I'll be honest, look, we've run Grow Factor for 12 years. For the first 4 or 5 years, all of our clients' accounts were signed off by chartered accountants. We didn't involve a CTA, chartered tax advisor, in the process. Once we actually started working with Tony Robbins, and one of the things that Tony said to me was, I want, Simon, you to give a second opinion on the taxes of every person that comes to Business Mastery that's from the UK, and you need to do it within 15 minutes. So I had to really quickly work out, okay, how am I going to do that? And part A of that is actually having a chartered tax advisor who all they're doing day in, day out is tax planning and tax minimization and tax avoidance for clients. They've done double the years of qualification than I have as a chartered accountant. So they are experts at tax. So one of the things that we did is brought a chartered tax advisor into our team. So does your accountant have a chartered tax advisor in their team? Your set of books getting signed off by a chartered tax advisor? Is it a regular accountant, or potentially is it even really a part qualified junior accountant? So the fourth reason, and one which is really, really common, is your accountant just doesn't understand your industry niche. Now, at Growth Factor, we've gotten to the point where we're big enough to have sub-teams, and we have 6 to 8 key niches. If we take health and fitness as a good example, because it's an easy one, there's specific legislation around actors such that they can go to the cinema, they can have their hair and makeup, they can get clothing, and that would be deductible. Whereas for, a marketing agency founder, that wouldn't be deductible. However, for a marketing agency founder, there will be other specific deductions and tax credits that are available to that industry. And it doesn't mean that your accountant has to only work in that industry, but they have to have an active process internally to understand your business. What makes it tick? Have they got multiple clients in that industry? How many years of experience have they got working in that industry? What case studies do they have around tax planning that showcase their expertise in the specifics of your industry? Because every business is not the same, and it shouldn't be treated as such. Your business is unique, and so are the tax deductions that apply to your industry. Number 5 in our list of 7 reasons why businesses overpay tax is that most of the time your taxes are rushed. Okay, maybe your bookkeeping's done in Xero, the accountant extracts that set of numbers, they run it through a piece of tax software, quickly check, have we taken the standard home office allowance, for example? Is there a telephone bill in there? Does it look like similar to last year? They're not spending, an hour, 2 hours, 3 hours having a phone call with you, diving deep into your previous financial performance and your future goals, and thinking about the individual tax deductions. Just a basic, simple one is, I can't tell you the amount of accounts I see with, I think for this year it's £312 in the profit and loss account for a home office allowance. Now you're actually allowed to calculate the exact amount of the value of this home office within your home and create an agreement between your business and you as an individual to rent that space. So I would never like to see in a client's set of accounts just a standard deduction. I would like to see, even if it's only slightly more, the result ends up going from 312 to 350 pounds. At least the accountant has thought about the scenario and created specific tax deductions that are unique to you and your business and your circumstances. So number 6 is that you are only using human beings to do your tax planning. And this is quite a random one. However, the second part of what we had to do 5 or 6 years ago, when we had to really quickly work out, someone's going to come to us at Business Mastery, they're going to sit down at our desk, bring their accounts, bring their tax return, because this was an offer that Tony made to the audience of Business Mastery. Now we do this all on Zoom. How are we going to give someone a second opinion on their taxes in 15 to 30 minutes, and as a human, not forget about things? Like, we know tax legislation is tens of thousands of pages long. A human brain is not going to keep up with the fact that this gets added to on a daily basis. So we need some kind of software or artificial intelligence almost to act as a safety net, a buffer, just in case we forget to do things. So at Growth Factor, we go through and we do human-based tax planning. And then for medium to larger businesses, we also spend kind of 60 to 90 minutes actually it takes. You can't really do this in half an hour. And we ask questions and we feed those answers into a piece of software which uses machine learning and artificial intelligence to cross-reference those answers against the tax legislation and produce a detailed kind of 20 to 30, sometimes 60-page tax report. And we do this every single year because the client's circumstances will change. So more than likely, the answer to the question, are you using humans and robots to do, or artificial intelligence, kind of beyond my brain to understand how this actually works. But it works because it picks up things every single time that we have overlooked. And lastly, in our list of 7 reasons why businesses almost always overpay tax, it's that you're thinking short term instead of long term. So you may actually have a situation where your accounts are signed off by a chartered tax advisor. You may have a call every year with your accountant where they're running your answers through software and they're using artificial intelligence. But I cannot see, or I've never seen, a scenario where someone who comes to Growth Factor for a second opinion has a documented long-term tax strategy, a strategic plan. And this is about not just thinking about the current year for your business, but thinking about your goals. Your tax planning now, what you put through your business as deductions and not, how you pay yourself, how you structure your staff remuneration, how you reflect your accounts, what you do with your equity, how you set up your company structure in a group or by itself, is all going to be determined by whether you want to keep your business and pass it down to your kids and family, whether you want to build up value in that company and sell the business, whether you're willing to move outside of the UK, whether you want to stay in the UK, whether you've got kids, whether you've got grandparents, and so on and so on and so on and so on. So we need to understand, as an accountant, for you, our client, what are your goals with your business? Where do you want it to get to? Which will link to a future training around financial goal setting and why that's so important. And then we create a tax plan, not just for now, but for how we've set things up now, such that your tax liabilities in the future will be minimized. And again, I just want to make the final point that these 7 main reasons why businesses overpay tax, none of them include any schemes. None of them include trying to get one over HMRC. None of them include anything that brings any degree of risk to you or your business. The kind of overarching theme here is understanding that HMRC put these deductions and these reliefs and these schemes like research and development tax relief credits and patent box and these other things, they put those there for you to use. And so long as you and your accountant are qualified and have a really good understanding of tax legislation, not how it was 10 years ago when you qualified as an accountant, but actually how it is today, we want to make sure that a business ethically generates the maximum amount of cash flow possible, because as a business owner, all you're going to do in terms of generating more cash flow is benefit by reinvesting in your business. You know, most business owners don't want to take everything they earn out of the business and roll around in Lamborghinis and Ferraris and be of no use to society in terms of the money that they're earning. Yes, you should reward yourself, but 9 times out of 10, most of that profit you're putting back into your business to hire more staff, you know, to spend on marketing spend with other suppliers, put back into the economy. So that's just a point on me about my ethical standpoint on tax planning. We will never do anything at Growth Factor, and I will never create the culture where we're trying to evade tax. But tax avoidance and tax minimization is something that should be done. You should minimize your taxes so you maximize your cash flow, and you deserve to get the maximum cash flow return out of all your hard work and sweat equity that you're putting into your business. So I hope today's episode of Business Class was useful. If you've got any questions about specific tax deductions, individual circumstances, things like that, I totally understand that you're probably not going to want to put them in the comments section on this video. Depending on whether you're watching an individual point and that's on Instagram or TikTok or LinkedIn, or you're watching a full video and you're on YouTube, there will be ways for you, either in the description to the video, to book a one-to-one call with me personally, and we can go through your tax situation and I can give you a second opinion on your taxes. If you're happy to ask the questions in a public domain, by all means, comment below. See you in the next episode of Business Class, where I will be going through the actual top 10 missed deductions, which forms the main part of our framework for giving business owners a second opinion on their taxes. See you then.